Hello, so this is what I wanted to look at. I wanted to take a look at the Russell, the S&P 500, and the Dow. Now remember, our current Elliott wave situation puts us in a position where as long as the Dow does not close above this high in May, then we're all right. But if it does, then we run into some trouble. So what is going on right now? If I actually go into like a 60-day chart and I bring up some indicators on, we'll just do the Dow for starters. If I bring up, let's say, the RSI and the momentum, what we're going to see is that we are starting to diverge and show some weakness in the overall market. So how do we actually tell this? Well, take a look at this right here. For the last 60 days, whenever the market would have like one of these upswings, just look in the top part of the chart. And remember, you could look at this in full screen in HD if you'd like. Every time it had one of these upswings, we had the RSI jumping up to this like 60, 70 level. And that basically meant that there was a lot of buying pressure in the market. We were very bullish. Okay, so that's a simple sign of a healthy bull trend. Now, what's happening is that we're starting a decline, and instead of having a single bounce down to like the 40 or 30 level and then going back up, now we went all the way down to the 30 level, but now we are using the 50 level as a resistance point instead of the 70 level. Basically what that means is that buying pressure has essentially dried up, and it's going to take a lot more news for us to get that buying pressure back into the market. So what this is called right here, well, first, it's a bearish divergence. Second, if you saw my post on my newsletter, it's also a very clear signal in my RSI trading system. And my RSI system is back-tested from 2005 to now, and on the S&P 500, actually it's tested back to May of this year, but on the S&P 500 it gave a 300% return, so probably a good idea to maybe listen to it. So what we see right here, we see our initial sell signal right here, and now it's using this level as resistance. Okay, so that's the RSI. On the lower graph, if I can just squish this RSI right here, you see that the momentum actually made its ultimate top right here around July 30th. Since then, each upthrust past that point has been on a lower momentum, or essentially what that means is that the speed of the advance and therefore the strength of the advance has been less. So you can actually trace out a pattern on here. So if I start from right here and I just draw right down, you can almost see that it's like a symmetrical triangle. Now, of course, it's pretty darn choppy, but what you would get from this is, let's see, just got my lower line. There we go. What you can see is if I draw this lower line right here and up, we see that this symmetrical triangle formation actually broke down right next to the exact high in the market on August 21st. And since then, it's pretty much been chopping, and we've been having these bearish divergences ever since. So the sellers are still in control of the market. So now if I want to go over to the Russell quickly. So go over to IWM. We had some curious movement in this today. If I get rid of all of these studies right here, what we saw, like, if I go out to a daily chart, you can see that I think that today might have been a blow-off day. So we were having this upward movement right here, and we continued to make new highs in this, and we made a new high right here, and it looks like we made a new closing high right here, not a new intraday high. That was on the 21st as well. But if we take a look at the volume, you can see that we were going higher on lower volume right here, and then suddenly today volume was twice its normal level. So I would say making a new high on higher volume, that's great. But if we actually go into the single day chart, what we're actually seeing from this could probably make us a little nervous. Take a look at the volume at the bottom of the screen. If I just go into a 15-minute chart for today, or 10 minutes perhaps, or there we go. 4 minutes should be a little easier. You see that on the volume was essentially stagnant. And then we started advancing, and when did volume start becoming very high? Became high when we stopped moving. What does that mean? That means that suddenly we had a lot of distribution, double the normal volume of any day on this ETF. Distribution hit the market, and it hit it hard. So if I saw this movement and I saw it over here, that would be great. But the fact I see it over here makes me nervous. So tomorrow is scheduled to be the exact high before we have a pivot on the 6th with the ECB meeting. So a low risk trade for anyone interested is you just take the IWM, which is going to be most likely the weakest ETF to a downswing. We're going to take the IWM, and because the volatility index is low, options are pretty darn cheap. They're still pretty cheap. We're just going to go out and we're going to go and buy some puts. So if you want to, it's all going to depend on your own risk preference. So tomorrow you could probably get the September 82 for $1.10 or so, assuming that we go up a little bit. Or if you wanted to, you could do a vertical spread, which those should be cheap as well. So let's take a look. If we do the 81.82, we have till the third week of September. Max risk for one of these spreads is $33. Max gain is 67. So nice risk reward ratio. And if our stop losses, if we make new highs, we get out of the trade. Very, very low risk. All right, so that's how we're going to do it. That's what I'm seeing, and happy trading.